Whether it's the amount of stimulus, COVID stimulus, the money printing that's gone on, that side of it, or in fact, the early signs of inflation we're starting to see creep into the system. That to me bodes well for further upside in gold.
What is up, guys? My name is Ignas. Welcome back to the channel. A month back, J. Paul Rollinson, the CEO of Kinross Gold, was invited on CNBC to discuss his outlook on gold with the current inflationary concerns. This is his take on the topic.
Started at the beginning of the year higher and it dipped, and back a few weeks ago it was 1,600, and I think with all of this noise around inflation, you've seen it climb up over 1,800. And that is a great price for many gold producers. You know, most of us do our costing and our mine planning around 1,200. So we're budgeting in the $1,200 mindset. 1,800 means huge cash flow for our sector. It has come up in the last few weeks, I think, because of inflation. And I think that story will continue. On days like today, you do get a bit of a kitchen sink. Everything goes out the door, to cover sales and cover margin. But I am fundamentally bullish on here and up from here.
So Rollinson suggests to not get distracted with red days, because moving forward gold will continue on the positive path. But then he is asked how gold will perform against another popular topic, which is cryptocurrencies, because that is also considered as an inflation hedge. Here is the response.
I think there are two fundamentally different investments. And I guess from my side, look, gold is a historical proven store of value. It's very liquid, it's regulated, and it stood the test of time. Gold is, in my opinion, it works in a diversified portfolio at both ends of the scale. When times are tough, you tend to get a negative correlation where people look to gold for safety. And in times of inflation, people look at it as a hard asset, currency diversification. I think crypto's just probably here to stay. There's probably more regulation to come. There's certainly a lot of volatility. To me, it's more of a technology play than what I would call a proven test of time store of value.
So Paul rather trusts gold, which has a proven history in an inflationary environment. On the other hand, cryptocurrencies are very volatile and they will likely be pressured with new regulations. With that in mind, for the stock comparison today, I have picked 3 gold miners. These are Kinross Gold, ticker symbol KGC, Royal Gold RGLD, and B2Gold, ticker BTG. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor we have are the analysts' price targets. As investors, we want to find how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. For Kinross Gold, we have 16 price targets of analysts. They range from the lows of $6.50 to the highs of $14.26. The average out of it is $10.97, and the current share price is at $6.48. This means that there is still around 69.3% room for the current price to reach the average target of analysts. For oil, we have 12 price targets of analysts. They range from the lows of $113 to the highs of $155 per share. The average is at $140.46, and the current share price is at $110.15. This shows that the current price needs to go up for 27.5% in order to reach the average target of analysts. For B2Gold, we have 15 price targets of analysts, and keep in mind that these are in Canadian dollars. The targets range from $4.68 to $9.37 per share. The average out of it is $7.37, and the current share price is at $5.53. This means that the current price needs to go up for 33.3% in order to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Kinross Gold gets the first point. Second factor is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price to earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. Kinross Gold has a forward price to earnings at 7.28. Forward price to earnings for Royal Gold is at 29.85. And B2Gold has a forward price to earnings at 21.26. Forward price to earnings ratios are in the table, and with the lowest value, Kinross Gold gets another point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take the numbers of the four most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for Kinross, and going into 2018 there was a decrease to $3.2 billion US. Then into 2019 we had an increase to 3.5 billion, and going into 2020 there was another increase to $4.2 billion. So with 2 increases and 1 decrease in annual revenues, we get a sum of 2. Revenues for Royal Gold, and going into 2018 there was an increase to $456 million US. Then into 2019 we had a decrease to 418 million, and going into 2020 there was another increase to $495 million. So with 2 increases and 1 decrease in annual revenues, we again get a sum of 2. Revenues for B2Gold, and going into 2018 there was an increase to $1.05 billion US. Then into 2019 there was another increase to 1.16 billion, and going into 2020 we had one more increase to $1.79 billion. So with 3 increases in annual revenues, we get a sum of 3. Results for the annual revenue growth factor are in the table, and with the sum of 3, B2Gold gets the first point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Kinross Gold has a price to sales at 1.91. Price to sales for Royal Gold is at 13.66, and B2Gold has a price to sales at 2.67. Price to sales ratios are in the table, and with the lowest value, Kinross gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. Kinross has a return on equity at 22.84%. Return on equity for Royal is at 11.44%, and B2Gold has return on equity at 28.33%. Return on equity percentages are in the table, and with the highest value, B2Gold gets one more point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Kinross Gold, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 met. So with 3 beats and 1 meet in quarterly earnings, we get a sum of 3.5. Earnings for Royal Gold, and Q4 of 2020 missed expectations, Q1 of 2021 beat, Q2 beat, and Q3 of 2021 beat. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Quarterly earnings for B2Gold, and Q2 of 2020 missed expectations, Q3 beat, Q4 met expectations, and Q1 of 2021 beat. So with 2 beats, 1 meet, and 1 miss in quarterly earnings, we get a sum of 2.5. Results for the last 4 quarterly earnings factored in the table, and with a sum of 3.5, Kinross gets another point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they're actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. Kinross has a current ratio at 2.16. Current ratio for Royal Gold is at 7.12. And B2 has a current ratio at 2.91. Current ratios are in the table, and with the highest value under 3, B2Gold gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. Kinross Gold is paying an annual dividend of 12 cents per share, which is a yield of 1.87%. The annual dividend for Royal Gold is $1.20 per share, which is a yield of 1.07%. And B2Gold is paying an annual dividend of 16 cents per share, which is a yield of 3.54%. Dividend yields are in the table, and with the highest percentage, B2 gets one more point. We can calculate the results, so Kinross has 4 points, Royal Gold 0, and B2Gold 4. This means that we currently have a tie between Kinross and B2. B2Gold seems to be growing really fast. Their revenues have been growing for 3 straight years, but they are missing on analysts' expectations a bit. On the other hand, the forward price earnings is almost 3 times lower for Kinross. They consistently beat analysts' expectations, and the estimated targets for the share price seem to be quite high. With that in mind, I'm giving an extra point for Kinross. So as a result, Kinross Gold is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there's a question for you, are you buying any of the gold stocks on this recent dip? Share your best picks in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. Last week we already had a comparison on 3 large gold miners, with Newmont, Barrick Gold and Franco-Nevada. And we also are 43 weeks in with the public stock investing portfolio. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.